I sold everything, all my stocks, all my index funds, and I bought Bitcoin. And once you've watched this, you'll understand why. Everyone thinks that the stock market is at all-time highs, but that's only when you measure it in dollars or pounds. Look what happens when you measure the S&P 500 against gold, a scarce asset that can't be printed out of thin air. Since 2016, the market has been completely flat, and since 2021, it's actually been in a bear market. In other words, in terms of real purchasing power, stocks are going nowhere. The only reason the numbers on your screen look bigger is because they've been printing so much money. But if everything else costs more too, what have you really gained? Things get more concerning when you look at the history of the Dow to gold ratio. Every time stocks peak against gold, it's followed by a massive crash. Since the creation of the Federal Reserve and the start of fiat money, this cycle has played out over and over again. And the trend since 2000 shows us exactly where we're heading. Scarce assets rising and equities struggling. Even today's so-called booming S&P 500 is a mirage. Strip out the Magnificent Seven and the other 493 companies have barely moved. Most haven't even kept up with the fraudulent inflation figures we get given. And history has shown us this before. During the hyperinflation of the Weimar Germany, their stock market exploded in nominal terms, up 21 trillion%. But when measured in gold currency, real returns were negative 74%. People felt richer on paper, but in real terms they were poorer. And although not quite as extreme, that's exactly what we're looking at today. Stock prices might look like they're going up, but once you adjust for real value, you're being robbed. That's why I sold everything and bought Bitcoin. Because unlike fiat money and unlike stocks that depend on printed money to stay alive, Bitcoin is the scarcest asset ever created. 21 million coins, no more ever. Follow me, the Bitcoin Guide, and I'll help you see what's really going on.